Hello, investors. Big tech's worst week in over a year was experienced last week. Three stocks, one brutal week, and one of them reports in 4 days. If you hold Google, Meta, or Broadcom, then this video is for you. You are exposed to what's about to happen. Meta had its one of the longest streak of red days in the last 5 years. In the next 8 minutes, I'm exactly going to cover these risks that we are all exposed to, the exact levels I'm watching on all these three stocks, the number one Wall Street is quietly worried about, what I'm doing before Meta reports on July 29th. Something interesting happened after the Google's earnings call. The AI trade just got repriced. Google dropped by almost 8% after the earnings call. And interestingly, Meta dropped by 11%, even though it had nothing to do with the earnings call. Or so do people think. People who are in this game of AI investment do know the close correlation between the Meta drop after the Google earnings. And interestingly, Broadcom also dropped by 2.7%. It's the worst chip sector week in over a year. We will see shortly why I say Broadcom drop is interesting. Google had a Q2 capex of approximately $45 billion. It is up 90% year over year, the number that triggered the sell off despite a record revenue beat. On the other side, Broadcom had a Q2 capex of $231 million. It's an asset light model, structurally different exposure to the same AI trade. What's the difference? Let's take a look. So many of the investors out there already know about this. The AI trade isn't cracking, it's in fact splitting. We can broadly segregate the current AI market at least into two segments, the sellers and the spenders. The hyperscalers like Google and Meta are the ones that are spending the huge amount of money to gain the infrastructure that they want to have for AI build out. In fact, Google, Meta, and other companies similar to them are buying the AI infrastructure at record capex and getting judged on whether it pays off or not. Broadcom, on the other side, it's one of the sellers of the AI infrastructure. In fact, it is responsible for the TPU manufacturing for most of Google, and most of Google capex is allocated towards Broadcom. It's an asset light company and it has a strong buy rating from most of the investors. Let's take a look at few of the key technical levels. Google is currently sitting at $319, Broadcom at $81, Meta at $95. Let's take a look at the technical on the trading view charts. Before the earnings call, Google was sitting at its 100-day moving average pretty nicely. It also was sitting at one of its support lines on the Fibonacci. And now what we can see is that the stock has dropped almost down to its next support level. What it signifies to me is that the stock has still some downside, maybe somewhere around $300 to $290. This is the level I'll be closely watching at. I'm not going to average down on this stock right now. In fact, I will be waiting for the stock to fall into the level of $90 before I make any call. Also, we can see that this is a flag that was formed by Google. Stocks generally form such a pattern. In a long-term upcycle, there will be a short-term accumulation which will form a flag. Eventually, the stocks will break out of this flag before making the next leg up. Now, from an EPS estimate perspective, you can see that the EPS estimate is just going up. By the year 2029, it's almost expected to hit 51 US dollars. And also on the revenue side, everything is trending up. By 2029, we are expected to reach around $440 billion of revenue. So what it means is that the PE for the future is actually underpriced right now, and we can invest in this stock for the longer run. On the other side, Broadcom is having an interesting story. The stock is sitting right its 100-day moving average. It's very close to one of its support lines, and its earnings are coming up. What it means to me is that considering the sentiment in the market right now towards the AI build out companies like Broadcom, I'm expecting this stock could have a bump up in the upcoming earnings call. So if that move is confirmed, then I'm expecting the stock to test the levels of around $420 in the shorter run. And maybe in the longer run, maybe in some months of time, the stock might test its previous highs as well. There exists some downside risk for this stock as well. However, the downside risk as of now is minimal. We have to strictly speak in terms of probabilities. And for this stock, I believe the probability to go up after the earnings call is higher in comparison for it to go lower. Broadcom also has very strong buy ratings of 40 analysts and 9 buy ratings. There are only 4 hold ratings. As you can see, the stock has an upside of around 38.41% from its current levels. The price target set by the analysts is around $528. Another interesting point that you will notice that On the minimum side, the rating is around $215.88. If you want to know the exact reason behind this one, then you will have to wait for my next video. For this stock, the EPS is expected to go up until 2029, and on the other side, the revenue is also expected to go up till 2029, reaching around $290 billion. So considering all these aspects, Broadcom also is a stock that has a buy rating from most of the analysts, and I will be considering to put my money into the stock without any hesitation. However, I'm going to go pretty cautiously with my investments in Broadcom. I'm going to take out my profits consistently every time this stock runs up by more than 20%. The primary reason is the AI build out is going to stop at some point in time. And I am closely watching when the capex for AI build out is going to stop by these hyperscalers. To put that into perspective, Google had a revenue growth of plus 24% this quarter. Meta in the last quarter had plus 33% of revenue growth, and Broadcom had plus 48%. I'm expecting these revenue numbers for these stocks to go up in the coming years. With Meta's earnings coming in 4 days and the stock sitting approximately at around $592 support level, whichever way it breaks, it's moving from a technically loaded position, not a neutral one. And again, from my perspective, the downside risk for the stock in the coming days is higher compared to its upside. I'm going to take a cautious approach towards Meta before this earnings call, and I will be saving some cash for future investments. Most of the investors are already aware that the big tech split into sellers and spenders. Now, if you want to learn all these aspects much more quicker, just like the other investors do, then do consider following Winvest Circle. Here we are going to break down 3 top stocks every week: the macros, the fundamentals, and the technicals. You'll also get to know what I'm doing with my money. So hit the subscribe button and let me know what do you think about the upcoming earnings in the comment section. I'll get back to you guys. Thank you.